For more on the challenges facing the Irish economy, we go live to Dublin and speak to Fergal O'Brien, Chief Economist at the Irish Business and Employers Confederation. Is Holohan realistic? I mean, looking at some of the data, prices for houses down 50%. I know they stabilised a little bit last month, but negative equity abound, 14% of the mortgages in arrears. Are we just misreading the data domestically in Ireland here?
Yeah, good afternoon, Manus. No, I think the Irish economy, the real economy, is fairly stable at present. We've gone through 4 very, very tough years in terms of economic contraction. We saw growth come back into the economy last year with GDP growing by just short of 1%. And this year, despite the turmoil we're seeing across the Eurozone, we're still on track to grow by about 1% again. So there's no doubt that the escalation of the crisis in recent months has faded some of our recovery hopes a little bit. At least it's delayed some of that recovery. But the economy is stable and is starting to grow again. So most of the fundamentals actually look pretty sound. If we look at the unemployment number, for example, again, unlike many other Eurozone countries, we seem to have topped out in terms of the unemployment number. We actually got some net new jobs back into the economy in Q4 of last year. And when we look at some of the other numbers, like our public finances, again, right up to date, we have numbers for the first 4 months of this year, and they're about 3.5% ahead of where government expected. So if we're reading the data on the real economy, it looks like we're stabilising. We're about to get back to sort of meaningful growth rates that we're going to need to outgrow these debt problems, but we're going to need the international situation a bit more benign than it currently is.
I mean, from the notes that I've read, Fergal, obviously a weaker euro is something that benefits the Irish economy because most of the trade is here with the United Kingdom or indeed with the United States of America. So is there a sense there that, great, we'd like to see the euro actually fall a little bit further? 22-month low against sterling, and you know it's falling against the dollar.
It definitely is a silver lining in terms of the crisis we're seeing. We'd like our European markets to be doing a lot better, obviously, in terms of demand factors. In terms of pricing issues, Ireland actually sells more outside of the Eurozone than any other Eurozone member state. And we also have exports as a percentage of our GDP are bigger than any other Eurozone member state. So we actually set to benefit more than any other member state country from this weaker euro. So it is good news. Last year we were trading about 140 on average against the dollar. You know, we're 130, so we'll have to see where the annual average is going to be this year. But it's going to be a lot more favourable than what we faced last year. As you say, the UK is still an incredibly important market, so the euro's lost quite a bit of ground against sterling, and against the dollar it's going to be a much more favourable exchange rate. And of course, in the Irish context at present, it's the pricing factor really matters in terms of the value of our exports and that value back into our GDP in terms of the nominal GDP factor, because that very much is the number we're chasing in terms of our debt to nominal GDP. That's very much the target we're after in terms of the constraints of the Memorandum of Understanding with the Troika. So it is some good news, both in terms of the real economy, in terms of our exports, but also in terms of the public finances and that nominal GDP number.
Sorry, I want to talk about perhaps the most pressing issue, which is the coming up vote on the fiscal compact. Give me a sense, has the government sold a yes vote strongly enough in terms of the potential consequences for industry, the potential consequences for being able to access the bond markets? Have they got the message right?
Yeah, I think the message is pretty solid in terms of how important it is for the economy. We speak to the business community every day, and you know, everyone is in very strong consensus of how important this is. But it's also a real opportunity in terms of a confidence vote for the Irish economy. It's a confidence vote for international investors in terms of where we see the future of this economy at the heart of Europe. But it's also a confidence vote for the consumers. Because if the consumers see that this vote is passed, that we have access to this European safety net if we need it, then there's going to be a lot more certainty around the public finances. So we actually see this vote on 31st of May as an important opportunity to improve the confidence levels in the Irish economy. That's really what's lacking at the moment, because the fundamentals, I think, are coming back. We saw consumer confidence numbers this morning. We got the 4th month on a bounce where we actually saw that index going in the right direction. We're not seeing it translate in terms of spending, consumer spending yet. The domestic demand is still pretty weak. But the key messages are supporting this treaty will be good for investment into Ireland, but it's also going to be crucial in terms of that safety net for the public finances. We may get money elsewhere if we're not in the ESM, but there's no doubt that it's going to be a lot more expensive. So the best thing for the public finances and avoiding further austerity will be to support the treaty. And I think that's getting through to the voters and consumers now, and I think government's doing a good job on that.
Fergal, in terms of the support and the criticalness that you've just referred to there, is it realistic that the Treasury will be able to go back to the bond markets and raise commercial money in the summertime? Is that achievable?
I think a lot is going to depend in terms of what's happening in the external environment, where we see the Eurozone crisis sitting. We've seen some impact in terms of the Irish bond yields today with the turmoil we've seen over the weekend, but they're kind of flattening out a little bit to where they were before trade. I think crucially, if we have the safety net in place, it will make it much easier for us to start dipping the toe in the market again. By having that certainty that the funding is going to be there if needed to call on, that is the best way for us to get back in the market. And if
Indeed.
we do see some sort of resolution, and meaningful resolution to the Eurozone crisis, I think the Irish growth numbers will start to look better quite quickly. I think the second half of the year actually could be much stronger. So it's going to be all about timing, like most things in life. So if we see the external environment improving and we get away this treaty vote on the 31st of May, then I think, yeah, we will be in a much stronger position in terms of dipping the toe in the market as we get through the summer months.
Fergal, great to get your opinion on all issues domestic. Fergal O'Brien, Chief Economist at the Irish Business and Employers Confederation. Thanks for your time.